What is going on, everybody? Welcome back to the channel. And in today's video, I want to talk about time frames. Now, these are some of the most common questions I get on my channel, whether it's in my live stream or in my comments. It's generally questions about time frames. Now, sometimes it's just general questions about how to actually understand time frames. Other times I get questions about how time frames relate to each other. In this video, I want to talk about how I look at time frames. I have a really interesting way of looking at time frames, so I just want to generally talk about what time frames are, what is the difference between the time frames, just quickly, because I have made videos about this in the past, so I'm just going to touch on that briefly. But the meat and potatoes of this video is really going to be how time frames relate to each other, as well as how you can use different time frames, being the higher time frames or the lower time frames or even the medium time frames. But the meat and potatoes of this video is really going to get into how you can use the time frames to find Confluence. Because if you guys watch my live stream or any of my videos on this channel, you will know one of the biggest things I look for when looking to enter or exit trades is confluence between time frames. And I think it's one of the most misunderstood things when it comes to looking at the charts. Now, this is probably going to be the first of many time frame videos that we make. I'll probably actually go ahead and make this a playlist because this is a pretty advanced concept and sometimes it's really hard to understand. So think of this as your 101 class to understanding how to find confluence between time frames. But before we get into it, guys, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these awesome tutorials or urgent market updates that we upload to the channel. So, guys, without further ado, let's go ahead and jump into the charts. Again, I do want to touch briefly on just what the time frames are, how to understand them, and just a pretty good way to actually think of them. I think really the hardest part about understanding time frames is getting somebody to explain them to you in an effective manner, and hopefully the examples that I use in this video will help you out. So first off, I want to cover what are the time frames really briefly, and then I want to talk about how the time frames actually relate to each other. Now, if you guys watch my live streams, you will probably know that I always talk about lower time frames bleeding into the higher time frames, so that's kind of what I'll be talking about, just basically how they relate to each other. If the 4 hour's looking bearish, how can we expect the 8 hour to play out, right? So we're going to go over exactly what the time frames are, how they actually relate to each other, and then how you can find confluence between these different time frames. Let's get into it. So, guys, here we are on the Bitcoin chart, and first off, like I said, I just want to cover what the heck are these time frames and how do you understand them. Now, I think one of the easiest ways I can explain this, or kind of what helped me understand this, was when I started thinking of the time frames in terms of resolution. If you have a very low resolution picture, there's not going to be that many pixels, and it's going to result in a very blurry picture with not too much information. And then if you look at a really high resolution image, it's going to have a ton more pixels involved, and it's going to enable you to see that image in a much more clear and detailed manner. Now, I know this kind of sounds a little bit weird. Why am I talking about pixels and pictures when we're talking about charts? And it will make sense to you in just a second, and hopefully this example helps you understand time frames a little bit better. Now, taking a look here, I'm going to start off on something like the monthly time frame. So, to start off explaining how to understand the time frames, guys, I want to start off on the monthly chart. Now, taking a look at this chart here, this is the Bitstamp chart, and this price history goes all the way back to August of 2011, and it brings you all the way to your current price action, obviously. And I want you guys to just note here, this is the monthly time frame. So, essentially, each one of these candles represents 1 month of price action. So we only print a new candle on the monthly chart one time every month. And you can see right here, we just confirmed this next 1 month candle yesterday. So we have an entire 1 month to print the next candle. If we zoom out here, you can see if we go ahead and count all these candles, there's actually 139 candles all the way from 2011 all the way to the current price action. And that's because this chart is showing us 139 months of price action. So if we look at the daily and we zoom out to all of the price action available, you can see we can't even really get to the end of the chart because there's too many candles in the way. But if I go ahead and we won't even count the bars all the way from the end. We'll actually just start from here, which is 2015. So we're not even starting at 2011 like we did on the monthly, but we're starting in 2015. And if we go ahead and come to our current price action, you can see that there's 2,972 candles on the daily time frame from 2015 to our current price action here. Now, this is because on the daily chart, we print a new candle every single day, resulting in many more candles than the monthly chart, right? So the monthly chart only prints one candle every month, but the daily chart prints a new candle every single day, giving us many more candles on the daily chart. So basically how I would look at this is you look at the monthly chart and you could see, you could think of these as pixels, right? Like this is a low quality image because there's not that many pixels. There's not much detail here, just general trends. You can see we generally came up here, generally came down here, generally came up here, generally came down, generally came up, generally came down, generally came up, generally came down, right? But if we go to the daily time frame and we come up to, let's look at this move here, which was the parabolic bull run of 2021. So let's go to the daily chart and take a look at this date of Sunday, November 1st, 2020. So, and notice here, guys, there is only a few green candles coming up on this move. So if we go to the daily and we come near that date, which was November, let's see, there we go, November 2020. So this is basically where we were looking. You notice there are many more candles here on the daily than there was on the monthly, in turn, giving us a higher resolution, more detailed look into the price action, right? Now, we didn't just go up in a straight line the way that it looks on the monthly. Right? If you come back to the monthly, you can see this just is all green straight up. But if you come to the daily, you quickly realize that that was not the case. We actually came up, wiggled sideways, and then we had a dump, and then we went sideways, and then we came up, got a little dump, came up, little dump, came up, tiny little dump, came up, sizable dump here, and then came up again, right? So this is an example of us going from the monthly, a very high time frame, down to the daily, still a decently high time frame, but much lower than the monthly, and you can see this is how it is giving us a much more detailed look because we have much more candles over the same span of time because on this chart, we print a candle every day, and on the monthly, you print a candle every month. So obviously, the daily chart is going to have many more candles than the monthly. So this is kind of how I think of this stuff. And then obviously, guys, this will bleed down into the lower time frames. Obviously, if you wanted to get an even more detailed look into this, we could come down to something like the 4 hour, and you'll see that we have to move the chart much more because now we have even more candles. You can see now that whole move up spans across my whole screen, and that's because there's way more candles on the 4 hour chart. Again, giving us a much more detailed view. You could see, this is, we came up, down, right? You see much more of the smaller movements on the lower time frames because you're essentially looking at a much higher resolution picture. Now, that's basically how you can think of the charts. I really encourage you guys to think of them in terms of like high resolution and low resolution. The higher time frames are low resolution. There's still good information on them, but you don't get that many candles, so it's kind of hard to tell what price action is doing because from this move all the way from 15K at the bottom, about $15,300, all the way to the top up here, we did more than just go sideways and straight up, right? We went up, down, up, down, up, down, right? Even on this green candle, we had uptrends and downtrends happening within this 1 week candle, and the only way to see that price action is going to be by going down to a lower time frame. So low resolution picture, right? Not that many pixels, kind of an undetailed image, right? Came down, big move down from this weekly blood diamond, and you just get a couple of moves here. But if you come down to a lower time frame like the 4 hour and look at the same price action, this was that weekly blood diamond. You can see all the higher resolution detail that we get in on these lower time frames. So that is basically how I would recommend thinking of the time frames. Think of them as the lower down you go, the more detailed of a view you're going to get, and the more you can zoom in, right? Because this candle, even on the 4 hour, there's all kinds of price action happening within this candle. So to see how that price action's actually playing out, you would have to come to a much lower time frame, maybe like the 5 minute. Now you can see this 4 hour candle, right? These two 4 hour candles, just two little purple candles, but if I go ahead and make a line at the beginning of this downtrend here, I'll draw a vertical line and come to the 5 minute. You could see that vertical line. It's not just two red candles, right? Because we're on the 5 minute, we could see we came down and then we got a pretty decent pump up on the lower time frames before getting a dump, before getting a pump, dump, pump, and then finally a bigger move down. So that's how I think of the time frames, guys. Just think of it as zooming in, getting a little bit of a higher resolution picture or a more detailed image. Now, with all that out of the way, guys, I want to talk about how the time frames actually relate to each other. Because if we don't know how they relate to each other, or we don't know the relationship that these time frames have, then it's going to be really hard to find confluence. So basically, guys, the way I think about this is the lower time frames tend to bleed into the higher time frames, right? So if you're looking, for example, during the current price action that we're getting right now, you can see here, I'm going to go into bar replay mode just so I can really hammer this home. And I'm going to come back all the way here before we got our massive move up from the weekly bullish divergence. Now, I'm going to come down here to the 2-day. Now, the 2-day you can see here is looking like it wants to print a red dot very soon. And if we come to the 3-day, it's a little farther away from printing a red dot. And then if you look at the 4-day, the 4-day is even further away from printing a red dot. And then the 5-day is even further away from printing a red dot. And then that 6-day is also pretty far away from printing a red dot. And then if you look at the weekly, you can see the weekly is almost just sticking straight up. So coming back to the 2-day, once that 2-day red dot prints, as you can see right there, I'll let it confirm. You can see there, now the red dot is confirmed on the 2-day. Now you would come up to the 3-day, and you could see now the 3-day red dot is printing, right? So the 2-day red dot confirmed, but now the 3-day is finally printing. Now your 4-day is also printing as well. Likely you will see the 2-day red dot print, and the 3-day will not be printing, and then the 2-day red dot will confirm, and that will cause the 3-day to start printing. And then sometimes you get, you will get multiple time frames printing at the same time, like the 3 and 4-day right now are both printing. But you'll notice the 5-day is not yet, but it's getting closer. So because I'm seeing the 3-day red dot printing, the 4-day red dot printing, I'm expecting those lower time frames, or you could think of them as like sister time frames, right? Because I'm not expecting the 1 minute to leak into the weekly, right? I'm not, 1 minute money flow is coming up. That means the money flow is going to come up on the weekly. That is not really how it works, right? That is, so you would want to think of it more as sister time frames, or time frames lower than the one that you're looking at, but close, right? So I hope that makes sense. I know it's a little confusing and a little hard to understand, but you could see because that 2-day red dot confirmed, I would have expected it to start printing on the 3-day, and you have it on the 4-day. And now that it's printing on the 4-day, I would expect it to start printing on the 5-day very soon. Boom, 4 days pass. You get that 4-day red dot to confirm. Now I'm going to come up to the 5-day time frame, and I'm expecting that red dot to now be printing on the 5-day. And if it's not, I'm expecting it to come very soon. And you could see right when we print that next candle, that is where you get that red dot to pop up. So now let's take a look at the actual relationship between time frames, right? Let's talk about how we can look at the lower time frames, or what I like to call them sister time frames, which is essentially, I would say, the 3 or 4 time frames lower than the one you're looking at. So for example, you can see here we're looking at our 2-day time frame, and as we move our candles ahead, you can see we are looking like we may print a green dot here very, very soon as that VWAP starts to work its way up towards that 0 line, and we get a little rejection there, but eventually we do wind up getting that green dot. So as we're printing this green dot on the 2-day, I'm going to come up to the 3-day, and you can see that the 3-day is now printing a green dot as well. And as we see that 2-day green dot printing, we're expecting it to roll over into the 3-day. We expect it to roll over into the higher time frame next to the current time frame that we're looking at, right? So if we come to the 4-day, you'll see we are not printing the green dot just yet, but you could see the VWAP is just behind the 3-day. And the 3-day is basically at this point in the same spot as the 2-day, but you want to think of it like that, right? If your 2-day prints a green dot, right, and it's going to be a sustainable green dot, it's probably going to show up on your 3-day. And if it shows up on your 3-day and it's sustainable, it's probably going to roll over into your 4-day. If it pops up on your 4-day, it's probably going to roll up into your 5-day, right? So your 2 and 3-day green dots are printing. Your 4-day green dot is not printing, but you can see it is not that far behind. As we move our candles forward, you can see we finally print that green dot on the 4-day, and now we're looking at the 5-day. Look at that. Now it's rolling into the 5-day as well, and so on and so forth. So as you play your price action through, you can see this 4-hour got the green dot, right? And then it got the red dot, and then shortly after the red dot on the 4-day, the red dot on the 5-day shows up, right? So you want to think of the a few time frames ahead are going to be slightly behind the time frames below it, right? So if it happens on the 2-day and it's sustainable, you want to think that's probably going to leak up into the 3-day, so on and so forth. And I kind of use this between the daily and the weekly. I see that, the daily is likely to leak into the 2-day, and then the 2-day to the 3-day, 3-day to the 4-day, 4-day to the 5-day, 5-day to the 6-day, 6-day to the weekly, right? And then I also do this with the medium time frames, right? So if the 1 hour VWAP or 1 hour money flow is starting to cross over into the red, I'm expecting that to start happening on the 2 hour, right? And you can see our 2 hour money flow starting to come out here. And then you would expect that to also be happening on your 3 hour, which you can see here, we never crossed into the green, but our money flow is starting to curve out. And you just basically are doing the exact same thing on the medium hourly time frames, right? So you want to think of them as sister time frames. The lower time frames are going to bleed into their sister time frames that are right above them. So left to right is essentially how I think of it. Now, with all of that out of the way, let's go ahead and talk about how we can actually find confluence between these time frames. And what we just previously talked about kind of bled into that explanation. Now, I actually have some time frames that I really like to use together that are very specific time frames, but that's going to be for another trading strategy video that we'll make regarding actually using different time frames. So let's say you're taking a look at that 15-minute chart and you're looking for a trade, right? Now, this is not a trading strategy video. I'm not going to find the key levels. We're not going to look for we're not going to look for multiple confirmations. I'm just going to talk specifically about the time frame confirmation. Now, if we're looking at the 15-minute, let's go ahead and move back in time and see if there was a way that we could catch this big red candle to the downside. So I'm going to go ahead and come a little bit before this dump down, and I'm looking at this and I'm saying, hey, we put in a bearish divergence on the 15-minute right here. There's probably a key level of resistance here. So if, let's just say for argument's sake, we put in this higher high on our price action with our lower high on our momentum wave, and that is confirmed, right? So we came into key resistance, got a bearish signal, and we started to wiggle our way down. But let's say we did not catch the trade off the divergence. Right now, I'm looking here and I'm saying, hey, confirmed bear div into key resistance, and money flow is starting to teeter out here. Now what I would do is come up to those medium hourly time frames and see what they are starting to look like. Because what you'll notice is between certain time frames, at least if you're using Market Cipher, you'll notice that the red dots pop up on your medium hourly time frames at the same time as some of those lower minute time frames are crossing over into the red with their money flow. And if you look at these and you're able to catch these in agreement, sometimes you can catch big moves up or big moves down. So with the 15-minute money flow starting to come out here, right, we're moving up, but I am seeing money flow come out. That is showing me that maybe this is a little bit unsustainable, and now it's really starting to roll off here. So now my first thought is let's go to the medium hourly time frames and see what kind of story they're telling us. Because the 15-minute saying money flow's coming out, we may start a downtrend here. So we're going to come up to the 1 hour, and let's see what's going on here. Well, 1 hour just crossed over into the red with the money flow. Let's look at the 2 hour. 2 hour just confirmed a red dot. And then your 3 hour is now printing a red dot, and your 4 hour is also printing a red dot. So in your head, you might be thinking, hey, if I'm able to get this money flow crossover, and if this bearish divergence is going to play out to the downside, I may be able to catch a little bit of a scalp trade here. So let's just, for example, throw up a random trade thing here, and we'll just say, whatever. It's not a trading tutorial. We're just expecting price to come down here. So this is our guess, right? And the reason for that is because money flow's coming out on the lower time frame. So you're looking at the 4 hour as your environment time frame. What environment are you trading in? Well, I see that we're printing a 4 hour red dot. That is likely to give us some form of a move down on a medium time frame. So if I could find a good entry On the 15-minute, maybe it's the money flow crossover into the red, or maybe it's the bearish divergence, depending on what you're looking at or when you happen to see the actual entry. You're looking down to the lower time frame for an entry, right? Because I already know that 4-hour on the red dot is likely going to give us a move down, especially because money flows in the red. And then you could even come up a little higher. The 5-hour red dot's also printing. Your 6-hour red dot is also printing. Your 8-hour is also looking to print a red dot, although it is not printing just yet. It is looking to print soon, right? I see that because the VWAP is cooling off. So I know if I can catch the top of a move down on a lower time frame, those higher time frames, once those red dots start playing out on the higher time frames, they will kind of act as a domino effect, and those higher time frames will fall on top of our lower time frame, continuing to push it lower. So let's go ahead and see what happens to price. I think we already know we're in bar replay mode, so we know what's going to happen. But money flow continuing to come out here, right? Money flow crosses over into the red, and boom, right? You just dump right down. Again, you're looking at the medium time frames as your environment, right? Because you're coming here and you're saying, hey, we hit resistance, we're starting to reject, we're printing a red dot, so I am expecting price to come down a little bit on the 4-hour. So I come down to the 15-minute. Maybe you see the bearish divergence forming. That would be the best entry technically. But more specifically, I would be looking at the money flow because it's that crossover into the red that can be absolutely tactical, guys. Look at this. Right on this money flow crossover into the red. Exactly at the moment of the money flow crossover is right where you get the dump. So if you could get those red dots on the medium time frames, letting you know that you might be in store for some medium-term downward price action, and we could get a good entry on a lower time frame, we are expecting that 4-hour to eventually crush these lower time frames down. So you could think of those higher time frames as a little bit of backup, right? Because all we're looking for is a 15-minute move down. But let's say we catch this trade down here, you can move your stop loss to your entry, and then if that 4, 5, and 6-hour red dot and that 8-hour looking to print the red dot very soon winds up playing out, this might turn from a little scalp into a much bigger move to the downside. So guys, I think that's all the time I have for today's video. Again, just in general, guys, you want to have a higher time frame to identify the market you're trading. Are you in a downtrend? Are you in an uptrend? Are you getting green dots with momentum coming up? Are you getting red dots with momentum coming down? Either way, if you're bearish or bullish on a medium time frame, that's where you want to go down to your lower time frame, find a good entry, get a little scalp, and then hope those higher time frames roll over on the lower ones and push them further down. We went over what time frames actually are, how to think of them, and again, you want to remember that little trick. You want to think of it as resolution, right? Those higher time frames have good information, but it's very low resolution. If you want more detail into what's happening inside each individual daily candle, say, you want to go down to a lower time frame, like a lower minute time frame, or even a low hourly time frame, to kind of get more of an idea of what's happening within that day, because there's 24 hourly candles within one daily candle. So if you want to see inside that daily candle and you want to see 24 candles, maybe go down to the hour. If you want to see an even higher resolution picture of that, maybe go down to the 15-minute. I don't know how many 15-minute candles are going to be in a daily candle, but maybe someone could do the math and let me know in the comments down below. So with all that being said, guys, I know this is a little bit of a tricky concept to grasp, but again, this is just a 101 intro into understanding time frame Confluence, and I hope you guys learned something. And with all that being said, that's all the time I got for this video. I'll see you in the next one. Frankie Candles.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Ayy, on the road, here we go, here we go. Yeah, we winning by a landslide.